We are live and connected with Camille. I'd like to welcome Dunn Anderson, Senior Mortgage Loan Officer. You've also worn many hats, former financial advisor, former life insurance agent, personal trainer, slick back car salesman. Just kidding, just kidding. BMW car salesman. And now you're a senior loan officer with Edge Home Finance. Welcome,
Thank you for
welcome.
having me. Thank you
Of
for having me.
course. I actually asked AI to go through my followers and help me pick a guest who would be the best fit for debt. And do you know what the output said? It said that D. Dunn Anderson would be a powerhouse guest with his background in finances, mortgages, personal training, life insurance. It makes you the triple threat. So we're here to get into it. And for those who are joining us who are new to the show, hey, this is the D's of real estate. These are the life events, life transitions that transpire that actually cause you to move. So today we are tackling debt. We're talking about overcoming debt and some strategies to help prevent and some things that we can do to get out of debt. And that's why Dunn Anderson he's here for it. But before we get started, I like to kick off the show and ask, where are we going? Where's the food? You're always in the gym, so I would love to know, where's the splurge cheat meal? Where are you going?
That's interesting. Splurge cheat meal, it would typically be really junk, like McDonald's Big Mac or something like that if I'm gonna have a cheat meal.
No,
It's
I want something more not franchise. I want something like a Fort Worth. You can only get it in Fort Worth, like a burger place. Yeah.
hmm, that's interesting. Well, how about not a burger place? How about Hutchins Barbecue? That'll be my
Nah,
cheat.
no,
What?
no,
That-
no, because we already talked about Hutchins last week. So, okay,
okay.
all right, I got one. If it's not a cheap meal that we're splurging and you're not, giving us my, burger joint, how about fine dining?
Hmm. Fine dining.
Yeah,
I've been a lot of places. I'd have to say, hmm, I'd have to say maybe Perry's. I
Paris.
like Perry's. Yeah, Perry's.
Okay,
They have a really
where
good salad.
where is Paris located?
Grapevine.
Grapevine.
Yeah,
Okay,
yeah.
okay. So, thank you for the food recommendation. I would love to ask. Um, So you're a native, born and raised in Dallas, turned Fort Worth resident, thanks to me. But tell me a little bit about where you grew up.
So I grew up in Oak Cliff until I was about 10 years old. Then my parents, they got divorced, so we moved. My mom and my sister and we moved to Pleasant Grove. Anybody knows about Pleasant Grove in the 90s? Nothing was pleasant about the Grove. That's where I grew up.
Okay. And tell me a little about your upbringing and what led you to some of the careers that you've undertaken.
Ah, so my parents were always, I would say, entrepreneurial out of desperation. Um, it was a situation where we would do things like clean buildings. My dad and I would cut yards, lift pallets, sell cans, just about anything you could think of legal that you could make money or earn money. Um,
Okay.
so everything was always a survival mode for me and my family. So naturally, I started playing sports. Actually, interesting story. Got into sports because I got in one of many fights when I was at Fred F. Florence Middle School. Anybody that went there in that area, they remember Reverend Giles. That was a football coach. Um, I got in so much trouble. It was either he gave me an option. He said you could try to play football, or we probably gonna end up getting you out of here. So Coach Giles, funny story, had this big paddle. He used to hit us with. That's back when corporate punishment was good and all that. Corporal punishment was good and all that. but nevertheless started playing, football. With football, it did get me out of Texas, which out of
Where?
my circumstance, which allowed me to meet new people, which changed my trajectory.
Well, you said it got you out of Texas. Where did it take you to?
I had a few offers, but I ended up going to Morgan State in Baltimore, Maryland.
Okay.
Me and about 5 of my friends were able to get scholarships, so
Okay.
that's where we landed. Yep.
Okay. That's awesome. So let me ask you this then. What was that moment that you realized helping people with finances was the best way to help build a financially abundant future?
Okay, so when you come from lack or not having anything like I did, essentially you look for ways to make the most money you can, right?
Okay.
By any
Mhm.
means necessary legally. So there were movies like Boiler Room, you know, different movies, Wall Street, that I would watch, and I was fascinated by finance. So I used to say that I'm going to one day become a financial advisor. So although my path in college was not in finance, can you hear me?
I can hear you, but
But you
we
can't
have,
see me.
yeah, I can't see you.
A quick technical problem. Hold on one second. I can fix that.
Okay.
Just give me one second.
So I'm hearing while you get set up on that, I'm hearing some parallels here because as you had me on your show, thank you for that. That's led to now me having a podcast show. Talking about my upbringing was that trajectory that led me into becoming more financially literate was not having that guidance, having to figure it out. Um, so I absolutely can resonate with that piece of your story of my parents at least setting me up to have more opportunity than what they had. So that was my dad's biggest thing of coming to this country for opportunity and making the most of it. So my parents were very big on getting an education, improving your circumstances, and doing better than what we could do for you. So thank you for sharing that portion of what led you into the trajectory of the here now and the passion of helping people rise from, as you're saying, your words, not mine, poverty and
Right.
improving the
Yeah, it was.
circumstances.
Hold on, I'm almost done. I just have to switch. Trying a new setup here,
And
and
it looks amazing. I mean,
yeah, but the problem is so that my dummy battery it didn't work. So now I have to switch cameras.
that's okay. It's looking like I'm going to take some time to say hello to all those in the comment.
All right, let's see. It
So
looks
that would
like
be Chewy624, Perry Steakhouse, Uncle Chewy. Jennifer is saying, doesn't Shaq have a barbecue joint in Fort Worth?
let's see. Does
And
he?
yeah,
And let me
for
see.
somebody who loves hamburgers, I'm surprised you don't have like two or three you can rattle off.
Well, it's actually been a while since I've actually went and had. Let me take that off. Hold on one second.
Okay.
Trying to figure this thing out.
So let me say hello to some of the people that I see on Instagram. All right, we got Purchase with PT Paul. We got Christine Green. We got Sold by Aisha. Let's see. We got Made in Studio. Your girl Zelda. Oh, we got the Ricky Mangrum, the REI Goats, Built Right Homes. You have to give him credit because he may have something to do with why you're here too.
Oh, really?
Oh yeah,
Yeah.
oh yeah.
Oh, see,
Uh
I'm
huh.
back with this. Oh, this camera's terrible, but I'm back.
Thank you.
You
And
see
then
me?
yes, we see you. And then I want to shout out to my son's barber. We're going to be seeing you very soon because his hair is out of control. All right, so let's get back to it.
All right, perfect. Sorry about that, y'all. Technical
No, you're
difficulties.
good. You're good. So, all right. So, where were we? You were talking about what led you into helping people become more financially
Yeah,
fit.
yeah. So basically, when you grow up in an environment where you have nothing, um, you're always looking for ways to be successful, so to speak. And in my mind or my eyes, success was always financial because
Okay.
again, you want to be able to afford the things that you never had before, and money is how you do it. So finance was a gateway to me for
Yeah.
me. Now, the irony is, once I had few paths led me to finance before I got there. I ended up, being a real estate agent for a little while. Again, quick money. That's what I was thinking about. Worked for companies like T. Rowe Price. Then I did the car sales, and then I went into the financial advisory. But I would say everything led me to have a different mindset when it came to people. It
Okay.
no longer became, I need to earn money and build wealth for myself and change my circumstance. It began to, oh, people actually need my help. I have knowledge or I have advice through all these different lanes that I've been in, where
Yeah.
now I can actually help people succeed and reach their financial goals in life. So really it went from selfishness and
Mm.
a bunch of different pathways to just really truly trying to empower people and help people financially.
Really leaning into that character development of all those previous roles to finally living that purposeful, meaningful life. That's what it's
Right.
saying
It
there.
took a lot of humbling to get there from, having the issues with the back surgeries, being
Okay.
crippled, having some issues where I was just out with the wrong crowd. There was a period of time where I would call it being on the shelf where I couldn't actually get a normal job, which is
Mm.
why I had to, open up a personal training company. Just a
Okay.
whole lot of different things that really humble you. Because I was one of those people, nothing could break me, nothing could take me down. I could do whatever I want to do. Um, really, really aggressive person. Um, and it just made me have different respect for people. Like they say, God will sit you down. And I really have stories about how he will sit you down.
Okay. Yeah. Yeah. No, you're absolutely right. Okay. Well, I'd like to welcome Mrs. Noby to the show. So let's start with D, debt. How we got here. For many families, this feels like a mountain between them and their future home. And I want to take the shame out of this conversation to set the tone. Like, this is a real thing that a lot of people face, and most of our clients, they're not bad with money. It's just bad situations and circumstances that have happened to lead to some of these debt related life events that they've experienced. So let's start with how we get into all this debt. Maybe that we often increase our spending on a newer house, a better car, we got a raise, the things that we considered living a good life, right? But at what point does providing a good life for your family then become robbing them for their future wealth?
Yeah, yeah. Well, so let's take it back. So how does one acquire massive debt?
Yeah.
So I'll use my own circumstance and then, being a financial advisor and then dealing with life insurance, disability, and all of that stuff. Most people go into debt not because they've over leveraged, but because there's something that occurs that causes them to not be able to work and lose everything, right? So whether that's divorce, whether
Mm.
that's illness, whether
Mm-hmm.
that's death in your family,
Mm-hmm.
whether that's a job that no longer wants you to work there, you
Mm-hmm.
know, these different things happen. And then it's like, I was earning this income, I built this life. I have the car payment, the student loans, I have the child care, I have the charter school or the private school.
Yeah.
You have a certain level that you live in, and then all these things just go away. And
Yeah.
then when you do not have the income to come in, most people only know how to generate income doing what they do, right? So
Yeah.
everyone's not an entrepreneur. You may work for the government. So when I was in Maryland, lots of my clients were government employees. So recently, the beginning of this year or earlier in the summer, where the new administration came in, even on my end, I'm working with clients that were in the government, wiped out, career
Yeah.
gone. So now they're faced with massive debt, entering bankruptcy because they don't have a choice. So a lot of people, like, obviously you got like the Dave Ramseys, the Susie Armans, and they'll speak
Love it.
about how we make dumb decisions.
Yeah.
Well, most people don't know the decisions that they're making are dumb because they don't believe that their income will ever shift.
Mm-hmm. Yeah, no, you're absolutely correct. I had a supervisor one time tell me, I was so excited, I was like, "Oh, I just got a new house." And he's like, "Is it congratulations and due?" I was like, I think so." He's like, "Well, I guess it's good for me because that means that even if you hate your job, you can't leave because now you got the invisible handcuffs. Even if you hate this place, I know you can't leave because you have the lien holder over your head." And I was like, no one's ever told me that. That's so morbid.
Yeah. Yeah. Most you bring up a valid point. You do become a slave to your debt.
Yeah. Yeah. You're right. So
So
for someone,
it's very important that you
go ahead.
oh yeah, yeah. I was gonna say it's very important that you design a life where you're not a slave to your debt. So, one of the things that I did before I purchased this house is I paid off a vehicle. Um, I like cars, right? So whenever I had a little money, I would always get a nice vehicle. But I didn't want a situation where the market falls out. I no longer get the income in this business, and I have the huge overhead of this car payment and also a mortgage payment, right? So
Mm-hmm.
you technically do really become a slave to debt, but it's our job to design a way that we're not slaves to debt, right? So on
Okay.
our end, in our industry, at least with me, and I've worked with you on several deals,
Yep.
I rarely allow people to jump out there and maximize their pre-approval
Yep.
amount for
That's
their
true.
home loan
That's
because
true.
things go up, property taxes go up, insurance goes up,
Mm-hmm.
and when people are excited, you can sell them anything, i.e., slick back car sales. Right? They put in that car. Hey, it's a payment's only 1,500.
Oh
I'll
yeah.
figure it out. Well, you don't figure out a mortgage. That's 30 years of your life.
Mm-hmm. Yeah. So, okay, let's talk about that. For someone who's considering making a cross country move for a better job, for a better quality of life, but the relocation, the startup costs, movers, furniture, funding the whole new place, it becomes a burden. But how can you help prevent financial ruin when you're trying to level up in life?
Yeah, I've done it 3 times. Moved from Maryland to Arizona, and Arizona back to the great state of Texas, and none of them were planned out properly. So,
Okay.
2020 hindsight, I would tell a person, even if you're moving and you landed the higher income job, make sure you have that 6 months of reserves, right?
Okay.
Make sure you're not dragging around debt.
Okay.
Make sure you pay off that car. Make sure all your debt service is manageable. Because I witnessed, when I was in Arizona, I witnessed a lot of people move there because the thing was, a lot of people from the Midwest would move there. It is a cheap cost of living to move and live in Arizona.
Hmm.
Well, beef is more expensive. It's probably just almost as expensive as it is in Hawaii or California in Arizona. Gas is
Really?
extremely high. Electric is extremely high. A 1 bedroom apartment back when I was there could be $2,200. That was, you
Wow.
know, 20 early 2020, 2019, last time I was there. So the
Okay.
cost of living can be a bit extreme there, but you say, oh, the jobs they pay more.
Mm-hmm.
Well, but your cost of living is up. So a lot of people make these moves
Mm-hmm.
without really, really calculating the true costs of what it's like to live in those areas.
Mm, mm. And I would encourage, just to kind of chime in when we're talking about a cross country move, is to see if you can negotiate some of that relocation cost to the employer who's bringing you on. So that's just something to ask. Hey, is there any relocation incentive? So for someone whose income has stayed flat while the price of everything has gone up, groceries, housing, and have had to rely on using a credit card just as a means to survive, like having to put daycare on a credit card, what is something they can do to stop that debt from rising?
That's interesting. How do you actually, well, I would ask you, how does one actually stop debt from rising if their income is flat?
Yeah, so
You
you
would,
need a hint. What do you tell all of our people? What do you tell our clients? You need a higher paying job.
yeah, you need to make more money. Like
That's
you need to earn more
that's
income.
your motto.
Yeah, a lot of, people, they don't like that, but you're talking to a person that thought I, I would only do a certain thing, right? Now I'm even looking to level up, just being around different people, but we all get in this mindset of I have to do this. The amount of people that I talk to that earn under $4,000 and $5,000 a month, it's unbelievable. And then when you dig into their background, they have all this experience, this knowledge, but it's just being wasted because they feel like they can only earn a certain amount of money. So my play. I work with them. We lay out what they're good at. We construct it. We prompt it. We put it in AI. We work out a 6-month plan to get you that higher paying job.
Okay, yeah, that's right. I know that you're trying to encourage somebody that's listening in to go in on something they're passionate and good at and make some money, even if it is just recording food content. So,
Yeah, and that's another thing. So at the end of the day, we look at other people and we look at their success, right? Instagram, social media, TikTok, whatever. Back in the day, it was lifestyle of the rich and famous. But you have to realize that everybody has a gift. But because we're so inundated with everyone else's success, or we're living vicariously through everyone else, we stop and then time just passes us by. So one day you will wake up. I had a buddy who's ex-military. He said, "Don't wake up dead." And I used to laugh, like, what do you mean? Well, one day you'll no longer have the ability to do anything. You'll be too old. I just turned 44, and the week I turned 44, I was extremely sick with COVID. And I just thought about, what have I accomplished with my true talent? And that goes for anybody. If you're sitting on a talent, right now you're in an age where the things that you know can change someone's life. Just by you picking up a camera and talking about it, it can be cooking, baking, whatever it is. You could change a person's life with your story. And coincidentally, you can monetize.
okay. So since we're kind of speaking into this generation, I have a good one right here is we're told that student loans and $800 car payments are the new normal. But when those equal a mortgage payment, that's a trap. To a young adult starting college and entering adulthood with a clean slate, what advice do you have to keep them from accumulating a mountain of debt?
Well, the first question is, what are you going to school for?
Okay.
A lot of us went to school, and let me tell you, so back in the day, the 90s, we'd see these finance movies or we'd see these movies where these people would say, I'm a executive. Not what they do. I just went to college and it looks like they're making millions of dollars a year. So there was no plan, but we thought going to college would lead to that. Well, as an adult, doing a lot of research now, looking back, you understand that college is just a financial money suck. It's designed, it's a revolving door to keep creating debt. It's built on debt, which is why tuitions keep going up. However, if I'm going to college and I'm going to be a defense attorney, a neuroscientist, a dentist, something that people need, then maybe that debt that I acquire is fine. But if I just want to go to college, then maybe I consider starting a business, doing a trade, learning how trades work, so I can become, so I can become the CEO. Like
Okay.
you have a friend, we call him Ben the Roofer. You know,
Yeah. Ben
Ben,
Antone, Kingdom Care Roofing.
yeah, Ben's an example of, hey, entrepreneurship, right? Now he's branching into construction. We got Ricky Mangrum on here.
Uh-huh.
Ricky goes from being a real estate agent to, hey, I can remodel houses. Now I can build houses. Now I can build whole subdivisions, right?
Yeah, yeah.
So,
That's where we're at now.
yeah, so, but if you spend 4 years in college with no direction, I would say maybe delay going to college and possibly try things that you're interested in. Because the stuff you look at on the internet, like you find yourself maybe someone fixing cars or building cars or whatever, that may be what you should try because that may actually be your passion, especially
Yeah.
while you're young. Why go in debt while you're young?
Yeah. No, it's a good point. It's a good point. So let me ask you this. For homeowners who are watching with maxed out credit cards, but their home values have spiked, when is it a good option or an idea to do a HELOC or a cash out refinance or tap into that equity?
Yeah, I would say whenever you have so much debt and you wake up and you realize that all your checks are going to debt. So we've all, been waiting to get paid and we looked at the credit card statement and realized the balance was more than our checks,
Mhm.
right? So when you're in that situation, but if you were blessed to have made the decision to purchase a home and you have equity, wipe it out, put it in the mortgage for 20 years or 30 years, whatever time you have, get rid of that debt, and then you spread it out over time, even if you're raising. So, for example, let's say
Okay.
you have a $40,000 car, it's $900 a month. You got a $30,000 student loan that's running you $350 a month, because they changed things. Now you got to pay the student loans. Then you got credit cards that are running you about 200 a month, equaling like 10,000. But you
Mhm.
got 200,000 of equity in your property. You know, maybe you
Mhm.
do a refinance, even if you got that 3 or 4% interest rate, because you're shrinking your monthly debt obligation by 1,500 to 2,000 or more.
Hmm.
And oh, by the way, you can always liquidate that asset when you're tired of paying that, when you're ready to downsize.
That's so funny because guess what? One of my questions is how do you know when it's time to liquidate an asset and get out of debt, i.e., whether that's sell your house, sell land, downsize for a fresh start? When is that a good idea?
Well, it depends on what life is throwing at you.
Okay.
If you no longer have the ability to earn, like I said, I was crippled, 3 back surgeries. It's tough. I wish I had an asset to liquidate to take care of me. So if you're getting divorced, if your spouse decides they don't like you anymore, they leave. Hey, maybe it's time to liquidate that asset and don't try to fight for it and put yourself in a
Mm.
position where you're drowning. Maybe
Mm-hmm.
you're an empty nester. Maybe your house is too big. Maybe
Mm.
you no longer want to be in the area. Maybe you don't like the change. A lot of people complain about areas like Frisco because demographic shifts, but some of those people actually have hundreds of $1,000s in equity. You're not trapped. Downsize, move on,
Yeah.
capitalize. A lot of my wealthy friends with like luxury homes, they have no ties to these homes. They buy them on the
Mm.
interest only. They put 20% down. They get an interest only. That house goes up. They sell it, do it again. They capitalize and they just keep flipping them.
Hmm.
So it's really what your financial situation is, what stage you are in life.
Okay. Okay. So, since you've been in the life insurance world, how does having the right protection prevent a family from one of these life catastrophes you're talking about, whether that's a critical illness or even losing a loved one?
Yeah. So listen, one of the biggest things that most people should have is going to be disability insurance. Disability can strike anybody at any age at any time. The youngest person, when I was doing life insurance, there was always a story we told. They were like 21 years old. Luckily they had disability insurance. Then when you think about long-term care or critical illness, there are a lot of people that are they seem to be the epitome of health, but one day they go to the doctor or they have a cough or their stomach feels bad. Now they have cancer. You know, you want those things in place because you don't know what the future holds.
Mm-hmm.
Again, I'll use me. I was benching, I got videos out bench pressing 500 pounds. And then less than a year later, I could barely walk. Couldn't do anything, couldn't work. And life insurance is one of the best things you can get if you're selfish. Does that make
What do you mean if
sense?
you're self? No, no, no.
Okay. So let's say I have 3, 4, $5 million in the bank. I'm 70 years old, but I want to travel. I want to buy nice cars and nice things. But at the same time, I have the responsibility to leave something behind for my family.
Okay.
So if I, at the age of 40, had a $2, $3 million life insurance policy backed up by a trust, I can now enjoy my own money in my golden years versus giving my money that I worked for to my kids and living a lackluster life. So life insurance is one of the most selfish things
But
that you can
unself
do to benefit your family.
but it's unselfish because you're making sure that they're taken care of after you're
Yeah, you'll
gone.
be dead. Yeah, you'll be dead. You're doing it so you can enjoy your life. I'm telling you. So that was how I sold life insurance. Nobody wants to buy death insurance because that's what it is. But when I explained to
Okay.
you, so, hey, what are you doing with your retirement? Well, my kids need this. I want to help my grandkids. And okay, great. Well, how about I can get you more money than you would have ever earned in your life that you can give back to your family? And oh, by the way, we can structure it in a trust in which they have to hit milestones, which is going to
Yes.
almost ensure they succeed in life, and you're going to fund their life. Hey,
Yeah.
who remembers granddaddy when they don't give them money?
Mm,
You leave
mm.
$100,000 to somebody's fund, granddaddy's name is going on a building.
Yeah.
It's just how it works.
Well, I mean, yeah, I would say you definitely helped educate me along the way. And, you asked me some of these questions, and I'm like, oh my gosh, what are you asking me this for? I don't know. And then you put it into perspective in a way that I could understand it. Like, what's the remaining balance on your house? How much life insurance do you have? And you're like, that's not enough. I'm like, what do you mean it's not enough? I didn't realize in order for the house to transfer free and clear to my family, to my child, I needed to have enough life insurance to pay that off. And then you ask me other probing questions like how much longer from here to adulthood do you need to fund your child if you're not there to take care of him? So it helped me understand, okay, now it created I need a line in my budget and my spreadsheet to make sure that I could take care of them when I'm gone. So it changed my perspective on life insurance because I just think insurance in general is a scam. You spend all this money, you never use
Yes,
it.
you're a very tough client and you think everything is a scam. And I do understand. Yes.
Oh, so let me ask you this. In the gym, you say you can't outtrain a bad diet. And in finance, can you ever out earn bad debt? Or do you have to fix the behavior?
You got to fix the behavior. Like when I first started earning an okay income, I was of the mindset I got to go, don't judge me, but I have to go to like the Lululemon store. Everybody has the mindset nowadays. We all are trying to keep up with everybody that don't care about us, that really don't. We think they care, but they really don't care about what we do. So we tend to try to show things like we earn a little bit more money, we buy more. You earn a little bit more money, you get a bigger house. All of
Lifestyle
a
creep.
sudden, all of a sudden you go from wearing, I don't know, Ralph Lauren to Louis Vuitton.
Mhm.
You know, I have friends that, you know, they went through hard times. They started earning money and they earn 10 times what they used to, but they're still in the same debt. trouble that they were in before,
Mhm.
because we keep upgrading our lifestyles the more money we make.
Yeah. And one of our guests in the comments said lifestyle creep.
Lifestyle
Absolutely.
creep.
Lifestyle creep. Absolutely.
Yeah,
Absolutely
because
lifestyle
you
creep.
so I go to a gym where I try to go to all the Lifetime Fitnesses. Right?
Hmm.
I go there because you're around people that are doing things that you want to do, and you realize you may see someone with a $5 million house. However, their net worth is literally hundreds of millions of dollars.
Hmm.
You know, they you can't a lot of times we try to keep up and make ourselves feel good. Like if you make $100,000 a year, we try to keep up with that millionaire, not realizing what they're buying is a drop in the bucket. They're
Mm.
not actually overspending for their circumstance. But because we're on the outside and we don't get to talk to them and understand that, oh, this guy has a $30 million net worth and his house is 700,000. That puts you in a different perspective. You earn 200,000. Why would you go buy $700,000? It makes you think, and then they tell you, "Oh no, I lived like this until then," and then you realize, like, okay, I call them sauna talks. You learn a lot in the sauna.
Absolutely. Okay. And sauna talks. Do you talk about, I don't know, books, and what books would you recommend that helped with your financial literacy?
Millionaire Next Door. I got a whole bunch of them behind me.
Yeah. Psychology of Money?
I read The Psychology of Money. Any book on money, any book, like any book where it talks about not necessarily being frugal,
Hmm.
but what money is meant for. The Richest
Cool.
Man in Babylon, a very tiny book based on biblical principles, very
Okay.
tiny book, will probably educate the average person on money more than any other book.
Interesting. Okay. I've yet to come across that one. So,
You never read The Richest Man in Babylon? Okay.
no, yeah, I have not. I think I've shared with you at some point in one of our conversations that um, when I got myself into financial ruin, me and my sister, we say we ran off and got this apartment as soon as I graduated high school and started college, and then went to Ashley Furniture Store and ran up, however the max they said we could afford. Then had to turn around and put everything in storage when we went crying back home. So now we're having to pay Ashley plus storage, not using furniture. That led us to now we can't afford going out on Friday nights. Shout out to the days when you used to be a bouncer at the club, right?
Right, right.
You probably would have. Look, don't judge me. Obviously, me and my sister look alike, so she would go in through one door and I would go in through the other, right? So, needless to say, it was watching Susie Orman and learning these um, financial literacy, these aha moments, that character development, I call it, that led me to being financially disciplined now, of understanding living beyond means, and like new mindset unlocked when I learned about compound interest. Um, I had a finance professor in college, and it's our first day, and he just walks in and is like, how many of you want to become millionaires? And everyone like raises their hand, like, who doesn't? And he said, every single one of you, starting with $100, can become a millionaire, because due to, you'll find out by the end of the semester. And basically it was compound interest. He said, if you put that money in the Roth IRA, tax free, or you pay the taxes on it now, when you pull it out, you don't pay taxes on it. He just showed us with $100 a month, that was like 2.5 million. So, needless to say, was okay. Had I not gone through certain life experiences, I wouldn't have the financial discipline that I have to this day. and understanding the true needing to save all of the things that you mentioned, needing to save an emergency fund. And I'm here to tell you, 6 months is not it, at least not for my risk tolerance.
Right.
6 months wasn't enough. I think as an entrepreneur, somebody going into real estate, I've always been told, and I recommend 12 months, because you just never know when your next deal is going to come. So, and really, whatever your employer is offering, if they're doing a 6% match, you want to at least take advantage of that free money that they're giving you. So
Yeah.
just
So yeah. So the thing is, knuckle again from a former knucklehead. When I had a corporate job, I was like, I don't want to. Why would I give any money to the 401k? Well, if you are a W-2 employee and your job is giving or providing a 401k, your money is going in on pre-tax dollars, and it's also lowering your tax burden.
burden.
Now, your 401k, it is, because I know my life insurance people are on here. Y'all like to sell those IULs. Listen, the 401k does charge fees over time. However, that money off the top, you'll never miss it. And most people don't have enough to retire. So if you have the option to do a 401k, a separate IRA, do it.
Yeah.
Just do it.
Yep.
Because when you're young now, you think you need this money. You're not making any money anyway. Yeah. As you earn more and more money, and this teaches you financial discipline, going back to the richest man in Babylon, basically the rule is you essentially take 10% and put it away.
Yeah.
You take another 10% and you make it work for you. The stock market, investments, this is how it works for you. A lot of you may say, well, I've watched the market crash and go down. Your wealthiest people have invested in the stock market long term, period. That's just how it works. There is money in the stock market. Your 401k is tied to an indices or some stock. So you will benefit, especially if you're getting a free match, 6%, 7%.
Yeah.
That's free money.
Yeah. And then it's also something you could potentially offer as if you have to tap into that to get into home ownership.
Correct.
It may be an option.
Yeah, correct. It is an option. You're going to be taxed on it, of course, because you're taking it out early, but a certain amount will be penalty free. You don't get the 10% penalty.
Right.
Either way,
Right.
Even if you do, that money, you would have never saved it. Most people won't if you hadn't put it there, because you never see it.
Yeah. All right. So I like to pour into the next generation before we head out for the night. So for the young adults listening in and they're about to get their first credit card or their first car loan, what advice do you have for them to keep their credit score strong?
Ooh, so that's a good question. So if you're getting a credit card, you should only be getting a credit card to build your credit. You should be using it to buy things like gas, groceries, but you shouldn't be using the credit card if you need the credit card. Why do I say that? If you need to use the credit card to survive, you're not making enough money. And that means you're going to end up with a credit card that goes in default, which goes into collections or a late payment, which is going to destroy your credit. So avoid getting credit cards and things like that if you're not stable financially and if you're not disciplined enough to understand that, hey, I'm just essentially using this as a financial tool so I can go make some type of move, whether that's a business move or whether that's buying a multifamily property or buying, a home, a residential property with my friends. So that would be my advice. And as far as a car, I hate to say it, none of it means anything. Like, I love cars still, and because I've talked to you about this, my next car, it'll be paid 80% off when I buy it.
Okay.
So just save your money for what you want and just realize that nobody cares. You got people, you can make $60,000 a year. They'll approve you for an Escalade with a $1,300 payment. Don't
Yeah.
do it. That car dealer, listen, no shade to car people, but car people are some of the most, they're worse than Jordan Belfort from the Wolf of Wall Street. I'll just tell you. Like, they don't care about you. Once you pay that car, they cash their check, they go party, they go get drunk. They don't care about your financial future. I do. Don't do it.
Well done. Thank you for being our financial coach that we all need. Dunn is with Edge Home Finance. And if you're sitting here thinking about, whether that's purchasing a home or that you have too much debt that's holding you back, you need to talk to him. So how can they reach you?
Yeah, you guys can just find me on all platforms at DunnAnderson.money. I promise I won't change this name. Phone number, text me, set up a call, 817-470-5488. I'd love to speak with you.
Okay, and I'm going to hang out for a little bit to see if we get any questions in the comments. So let's see if we get any comments that roll in. One thing I've heard is that they changed the way medical bills are calculated to when it comes to buying a house. Can you speak on that for a second?
Oh, yeah. So medical bills, they're actually not included, right?
What do you mean?
So they're not a part of your debt to income, right? So you can have a derogatory, medical bill. It's not going to count as a payment. However,
Really?
the derogatory medical bill will affect your credit standing, meaning your credit score, which will cause you to pay more because you will have a higher interest rate. So when I took care of my credit, I paid everything. I paid my credit cards, I paid a repossession, I paid all of my medical bills.
Okay.
My credit shot up. Like, they'll tell you, go ahead.
So for clarity, if I have a $50,000 medical bill, that will not be included in my debt to income ratio. But if I don't pay it, then it goes to a derogatory and it brings my credit score down.
Correct.
Okay, just so we're clear as mud. Brandon has a great question. Are there any debt to income ratio myths?
Yeah, I've heard, that's a good one. I've heard people, people will go online and they'll see this thing that says, because they'll look at like conventional loans and they'll see 45% debt to income. That's not true for all loan types, right? So conventional loans, you go up to 50%. VA loans, I mean, we're helping people with 70%
Wow.
DTI, debt to income, because of certain things in the background, right? Certain household income, all of that stuff, residual income. FHA loans, 57%. And at the end of the day, you really just need to talk to a competent loan advisor to actually show you your numbers, because you can be going online looking at a debt to income and it's not even relevant for your situation. Right? So just talk to a loan advisor. Don't be afraid. Just talk to the loan advisor and let them help.
Okay, we have another very technical question. Rapid rescore pros and cons.
Rapid rescores are awesome if you do what I tell you. So what I do for people is I'll review your credit. Like, if you have bad credit, I've had bad credit. I'll tell you what to do is really just paying your bills, and I give you a time frame. And the way a rapid rescore works is literally, if you do what you're supposed to, and you have the documentation to support those items that you took care of or paid off, then we submit it. It costs us money, not you. Rules are rules. But within 7 to 10 days, we have an updated credit score, and in most cases, we're able to help people. Now, the only thing that can hurt you though is if you have late payments within the last 12 months on multiple items. Sometimes you get away with one or two. But if you have a lot of that, it doesn't matter if you pay off your debt and get your score up. Sometimes you have to wait until those late payments fall off for that 1 year period.
Okay. Great information. And the last thing I want to leave y'all with for my business owners, that's the LLC owners, people who have trusts and trust LLCs and corporations. Okay. I just closed a land deal and new FinCEN requirements are coming out. The current requirement was any cash deals under or over 300,000 had FinCEN requirement. Now it's it doesn't matter the dollar threshold. It will now have FinCEN reporting requirement, and that's to reduce money laundering and foreign entities from buying land through shell companies. So if you're considering purchasing properties, land in an LLC, trust, or corporation, they now have FinCEN requirements. So starting March 1st. That's the last real estate update I have for you guys. Hey, everyone, thank you so much for joining us. We have Joseph who just joined. You'll have to catch the full episode. Will be on YouTube. We're out.